I really want to talk about a couple of consensuses, which I'm seeing when I talk to expert panels, fund managers, investors, and when we talk to fund managers as well, about copper, the outlook for copper versus the reflection in equities. Now, Bezant was restructured as a copper company at the beginning of the year. We're huge balls on copper. And everywhere I see a consensus growing behind copper, and a type of consensus which, frankly, I haven't really seen since the iron ore boom years, that iron ore and now copper was the place to be. The other consensus I see building is, when do we get value in the share price? Because the majors this year have had a fantastic year, I think. There's been lots of good cash flow, lots of good production. There has not been a lot of acquisition, I would say, at this point. I think it's been a year of bedding down. This year, I took over as CEO in the beginning of the year. We brought in a new chairman, Colin Bird, who successfully developed companies. We brought in new investment, and we sold a failing series of platinum assets in Colombia, which had suffered from a stalled development phase, where fundamentally money couldn't be raised to continue to develop those into production. So rather continue with that, we sold those assets, recapitalized, restructured, and we took the existing copper gold assets that had been lying fallow within the company and started to work on them. And we're genuinely excited by them. And we have a lot of copper for a junior company. And we have a lot of copper at the right grade in doable projects. We've had these licenses for a long time as a company. And one of the questions we get asked a lot is, how are you going to get value from them? And when are you going to sell them? I mean, let's be honest. Especially the Mankind project, which is a massive copper gold porphyry. I think copper's in a really interesting place at this present moment in time. Yes, the markets, the equity markets, and copper is having its issues. I think there's a lot of worry, obviously, over the trade war, if we can call it that, between China and America at the moment. But you do see the momentum building up towards huge deficit demand in supply within the commodity. So we're sitting on this copper. Is that enough to be able to sell it? And I think the answer is frankly no, to be quite honest. We spent a lot of the last year working very carefully on reviewing all of the data on two key projects. The large block cave Mankind project in the Philippines and a smaller brownfields exploration project in Argentina. They're both the diametric opposite scale of what copper gold projects can be, to be frank. And we've discovered a lot of things, and we're going to start working on these projects as we announced this morning. And I was pleased to see the share price actually went up by 9%, looking at the economics within our larger Mankind project. Because everything I read, and never fill a slide with words, but I thought just this once, this is what I'm looking at. This is what I'm looking at for 2019. I believe that commodities will correct, and I think copper is one of the key places to be. The issue is, do we just sit there as refocused Bezant, yes, we've got a copper gold portfolio, and do nothing? Or do we start really thinking about what our assets are? So, EV, that's extremely interesting. I mean, suddenly you're seeing a lot of the major mining companies turning copper into the EV metal. And yes, it's a perception thing, but the demand, you can go out and see the demand rates, the forecasts in the market and the deficit in supply. People often say you need an escondida per year to meet the copper shortfall. But the point is suddenly copper is actually getting quite exciting. Suddenly there's new markets opening up. And frankly, being a listed equity, perception is pretty important. To suddenly seeing our much bigger brothers connecting themselves to the EV market is exciting and interesting, and so is the sea change within copper itself. And the point is, we do have copper. There's some of the core, a picture I took from one of our review processes that we engaged in earlier this year, where we've brought in whole new geo teams. We've made lots of changes on the grounds. We've brought in new engineering groups, as we announced this morning, to look at all of our projects and see what more value we can wring from them. So here are our two projects. So on the left, you have the large, it's not 1 billion tonnes, it's around 250 million tonnes, Mankind copper gold asset. It's, I would say, a low tier 1, upper tier 2 asset. It's not a big 1 billion tonnes, but the grade is really interesting, and that's something we're looking at. The projects on the right, frankly, I would love to drill. It's been sitting in the Bezant portfolio for a while. Those are IP survey targets. Effectively, it was an old mine at surface, mined successfully on and off for a couple of 100 years. But what's never been looked at, or what's never been drilled, is a whole series of high chargeability spots across the entire licence. Again, we have to be careful of shareholder money, but we have the option to develop value from a potentially near-term producing asset, maybe with feeders sources of gold and copper within 300 metres of surface. But let's talk about the Mankind project in the Philippines. Political risk. Political risk is one of our issues with Mankind. Feedback I had from one major mining group is, yes, we're beginning to look at things in the Philippines, we're changing, but frankly, Mankind would be a producing asset if it had been in another part of the world. Perception is changing about the Philippines. Before this year, it was an extremely challenging environment to do business in. I think now it is different. Things are changing. We are keeping an eye on the situation, and also the need for available copper is increasing. So suddenly we can have a lot more conversations, many more conversations than we could previously have last year and the year before, because the situation in the Philippines has started to normalise. One of the issues is, frankly, the president doesn't like open pit mining of any description, particularly nickel. We're underground. So, and we're also in the North Island of Luzon rather than the Mindanao, which has typically had more problems, but where, for instance, Medusa has operated quite happily with their gold project for a number of years. So there you can see the inferred and indicated resource. It's large. We've done lots of work on this to scoping study level in the past, but we've reviewed all of this information. Here's how we're sort of looking at the projects. And here is where the project sits in terms of value. So just having a look at average copper grades, having a look at our gold grades and copper grades in context to all the copper gold porphyries in the world. And our grade really puts us up here on the trend line. And Mankind is going to be about grade, and that's the new story about where we're taking this project. Again, value in context in terms of mining projects around the world in terms of copper and grams per tonne. You know, we're sitting here, we're not a big, massive porphyry, we're not 1 billion tonnes, but again, the grade stacks up quite well. But this is the interesting slide, I think, is that traditionally, I would say, 10 years ago, 15 years ago, you were seeing grade levels in copper companies much more up here. I think you're seeing average grade going down and going down and going down. And where we sit with our gold and copper here, yeah, we're 250 million tonnes, we're not 1 billion tonnes, but we're economically robust. The issue is block cave involves a lot of capex. And here's something interesting. Here's us in comparison to existing and past Philippines producers. And so Stowe Thomas, which I'll just find for you here, etc., that's about a 2.5-hour drive from us. And it's been successfully producing with lower grade for about 20, 25 years, quite happily for its owners. So again, there is a real tradition, there is real expertise of mining in the Philippines. There's just been a legacy of difficulty in terms of the major mining companies operating in the country. So what are we going to be doing this year? Really, for Mankind, is about grade and mining approach. We started looking at the grade. We started stripping everything back. We went back to first principles, and we started looking at this project in different ways and looking at the existing grade within the Snowdon JORC resource, especially the higher grade areas, and where also, frankly, where we've identified gaps in the drilling grid, i.e. places where we could potentially drill in the future to prove up higher grade areas. There is no point putting tons and tons and tons onto this project. Shareholders occasionally ask me, why didn't you drill it? Why didn't you increase the resource? There is no point, in my view. We are going to get to 1 billion tons. Clever, intelligent, detailed work where we can take advantage of our grade. Goldfields had an option over this project when I was an advisor to the company of 70 million, which you can see up there. We took about 10 million, returned some to shareholders. So in a sense, it's got what my chairman likes to call a franking stamp of $70 million of value. Why didn't Goldfields take up the options? Well, I think they quite publicly said that they were changing their political risk portfolio and they started moving into Western Australia. And that was the last drill hole that they drilled. And that's really interesting because that is the highest grade drill hole that has ever actually been reported on Mankind. So that was even before, that was after that they took the option out with us, obviously. So we're looking at other areas where we can potentially identify gaps which may generate results like that. But before we even go there, this, as those of you who may know the company, it was the existing TWP and then Mining Plus scoping study. There were several different iterations, but fundamentally it's a two-phase block cave. So insert into here and then quarry up here and then down to the bottom. The issue with block caving is that it's really very expensive. It's $1 billion, and that cuts down your options as a small AIM company about what you're going to do with it, or indeed who you can talk to. And we started doing a lot of work, again, on an engineering basis, looking at lift 1 and looking at lift 2, looking at where the high grade sits and looking at where some of those gaps I've talked about sit. This morning, I made an announcement where we've actually engaged Mining Plus after an awful lot of discussion looking at the data. And what Mining Plus, who are a world-class engineering and geological group, are going to do, they're going to be working with us to look at alternative mining models into lift 1. Because frankly, not enough work was done looking at the grade within the lift 1 area. And if we can find a model within the lift 1 area which is alternate to block cave, which suddenly brings the capex all the way down and allows a nearer term mining solution to this project, even if lift 2 ends up being block caving, suddenly that becomes very interesting for the company. Because suddenly little old Bezant, with its low share price, is first of all going to be moving this project forward and giving an alternative product, if you like, for people who want to develop this, whether it's in partnership or people who want to acquire us, than the high $1 billion capex full block cave model. I think it's also important that we can move this project forward and potentially look at other options about how this project might be developed. The Philippines government, yes, they've talked a lot about shutting down open pit mines, but there's a strong tradition in the country of mining, and I believe that we can progress this project forward. One of the things which isn't very exciting for investors, I know, but we've been doing a lot of work both in the Philippines and in Argentina on community relations and rebuilding our relationships within the companies. So we've been spending a lot of time down there putting more money into the local areas so we can start proper work during 2019. So that's just a summary of Mankind. And I think the revised mining approach is the first step forward into looking at how we can approach this major project. and how we can actually wring some value from the company in 2019. But I do believe that there will be a step change next year in terms of perceptions on copper and activity within the copper sector. Just quickly on Eureka, again, northern Argentina at some serious altitude. Effectively, it was previously mined. It's had a series of groups work on it and go over it. Last time in 2008. It's lain fallow within this portfolio of assets. And frankly, if the share price was higher and we could justify it at this time, I would love to be able to sit 4 to 8 drill holes. So just note the chargeability area there. Into the targets up at the north underneath the mine, because there is definitely copper there. And what we think is that within 200 to 300 metres, let's say, underneath a series of red bed layers which contain copper and gold, we will hope to identify or certainly target the feeder zones below them. And by identifying them, and again, you're going to higher grade zones if we're correct in our assumptions, and suddenly for not very much money, that starts looking very interesting as a viable near-term mining project with potential low capex. But at the moment, we're conserving our cash. We're being very cautious about the steps that we take. And I believe that while we just quietly work on Eureka in the background, I think the work we're going to be doing on the engineering with Mankind and having a look at the alternate economic state will be important. So thank you.
Thank you very much. Do you have any questions for Laurence, please? Gentleman here, thank you.
Thank you, Laurence. What are your thoughts on funding in the next 12 months? You raised money at 36p in May, share price at 22. How are you going to fund this effort over the next 12, 18 months? Thank you.
That engineering study will be funded under current cash. We've cut very early on all the expenditure back from the Colombian days. Consultancies are used and they're turned on and off as we need them. It is likely that we'll need to raise money again in 2019, but I'm hoping to be able to put news flow out before that happens.
Thanks.
So if I may, just kind of put it in kind of layman's terms almost, the strategy by engaging Mining Plus and to look at the engineering is to try and demonstrate to the market that the difficulties in developing the Philippines, you're making it as easy as possible for someone to come in, a developer, or to take the project on. Is that right, or am I getting...
Yeah, essentially, I'll just put it in blunt terms, it's different products for different audiences. It's almost different voting groups, demographics. You know, there are only a very small amount of companies in the world which can fund $1 billion of capex, for the sake of argument, up front, before you even start getting into mining. And the OPEX remains attractive and the mine life remains attractive. And effectively, you get a big long-term source of copper and gold. But really, we've been talking to a lot of groups. We're talking to new groups as well, which is interesting. The thawing of Sino relations, so that China with the Philippines is proving extremely interesting. But frankly, I want to widen the conversations we can be having and also the ways that we can go, talking about new parties. And for me, there's a sort of a cut-off in CapEx, which is sub 400 million CapEx for 60/40 development. I think, you know, call it discursive amongst people, but that threshold is quite interesting. Now, I'm not saying we're going to get there necessarily, but that's certainly something I want to look at, because that opens you up to a whole new range of options and ways that you can do things. And honestly, I think the world's getting more difficult in a whole load of different places in terms of political risk, where you put your money. You know, there's parts of East Africa where I've worked where I probably wouldn't go back again, to be honest, and I quite like being able to drive all the way from the airport on asphalt to site in a safe environment. But the fact of the matter is, $1 billion in the Philippines is one of the stumbling blocks, one of the conversations we continually have, because foreign ownership companies in the Philippines have not always done well. So I want to change that, or at least provide an alternative option.
And this strategy is essentially the cheapest way to get you there, right? Rather than instead of kind of going out and trying to spend more money in the ground.
I just don't see it. It is, but I think even if we had more money, this is probably the work we need to be doing. So yeah, I'd love to drill a couple of cheap holes in Argentina, but at 150,000 to 250,000 bucks per drill hole, 1,200 metre down into the porphyry, that's a major expense. And if we were to do that, it would be having a look at the grade. It wouldn't necessarily be about adding tons and tons and tons. I think we need to fight clever and also just retain the value within the company as hopefully the consensus on copper changes, as I think it will do. I think next year is going to be interesting.
And another question, if I may, about the Colombian. Is that all clear, all gone? There's any legacy or any other things that...
No, it wasn't. It was, we took the $500,000 and there's a last stage payment to come in of 50,000 if it's not already in the bank. But all the liabilities associated with that mining operation have gone. We vended it off to an operator there who's backed by a PE group in the UK. Still in touch with them. I hear that they've got containers going down. It was a shame, but at the end of the day, we couldn't raise more money to continue our development operations. So there's no point doing it. But I think they're getting on well, actually. But all liabilities have gone, all costs have gone, bar a very small amount, just tidying up some admin just for good practice.
Any other questions, please? Gentleman here.
I assume at the moment you're not paying a dividend, so investors would gain simply by the share price. And it looks like your strategy is that you will want to be bought out because of the high capex costs of actually developing the mine. At what rate would you be willing to sell out? And what would you tell the investors who bought at 36 pence when the share price is now 22 pence? Thank you.
Thank you. For an AIM company with our share price to try and develop on our own $1 billion capex project is obviously not feasible. I do think there's other routes that can be pursued. I think other sectors and industries are very efficient actually at different structures to develop projects and gaining value from them without diluting shareholders. So I do look at some of my experience looking at farm-ins in the oil and gas sector as a really interesting way forward about how this project can be developed. Again, it comes back to there's no point just sitting here saying, I will get bought and pretending to do work. What I want to do is do meaningful work which can actually open up a number of options. Yes, sale, possible partnership, or possibly even looking at another structure forward with investment funding to move the project forward into feasibility study, because I think we need momentum, and I think it's a highly valuable project. What I would say to the shareholders who have bought previously and whose price is down, yes, I completely understand where you are. I wanted to start with the share price graph. I don't want to harp back to it because we have talked about it a lot, but when this project was acquired, I can remember it was my first client as a company I started up. And the Mankind project was bought into the company. And a lot of people said, no, you shouldn't do that. There's no point doing it. Everybody wants 1 million ounces of gold in Africa at 1.5 grams per tonne plus, which, whatever. So we brought this in, and the share price was minuscule. And we took that share price by doing intelligent work, by the drill holes the drilling campaign that we undertook, the JORC resource, etc. And then we got a buyer in the shape of Goldfields. And if you remember, the price was extremely different to what it was now. And we returned a significant proportion of that dividend to shareholders. That's the past. We need to focus on the future. But what that tells me is if we could do that then, in a market which wasn't as excited about copper as it is now, then I think next year is really exciting. And honestly, we've done a lot of work which is boring and tedious and behind the scenes and necessary. And yeah, we could have gone out and sunk some holes and raised some more money. We get offered cash if you want to know the answer, but there is absolutely no point in doing it. I am actually genuinely excited about next year. And I think where we've taken the company before, we can do so again, is my blunt answer. But we need options and we need proper work done on this project.
Any other questions, please? Gentleman at the back, please, Chris.
You've only got a license for 2 years, is that right, at Mankind?
That's right, an MPSA
And
license.
Is that if you like, a barrier to selling the only a 2-year license? Are you thinking of extending that?
Possibly. Sorry, can I have some water? Is that all right?
Yeah,
Slightly.
yeah.
Thanks. The MPSA license, essentially MPSA, you own 40% of the project. Thank you. As a foreign-owned company, and we have structures around it, which means that it's not necessarily an issue. So, for instance, Medusa mines within MPSA licenses, and they have a processing license in place, so they can take pretty much 100% of the value of production. Again, we come back to your species of partner and potential buyer. For some large groups, mostly Western mining companies, the conversion from MPSA to FTAA, which allows 100% pretty much foreign ownership of the asset, is one of the crucial issues with the Philippines. No doubt about that. There are other groups, increasingly, who care a lot less about that, frankly. And obviously the Philippines companies themselves, it's immaterial to them. So conversion is always an issue. We always take it seriously. But I think the speed which we converted or got a new MPSA was quite impressive, and we've spent a lot of time on the ground talking to the right people, doing the right things, making the right investment, and talking to the government. The Mines Department is in a period of, I wouldn't call it flux, but it's stabilisation at the moment, and we're feeling we've got good relations. So licence conversion renewal, always a worry, frankly, no matter what the law says. I think a bigger question for next year is, do we continue the MPSA, or do we actually consider converting to an FTAA? And I think that depends a lot on to who we're talking to about halfway to the second half of the year and how they're feeling about life.
Okay, thanks.
Do you have any other questions, please? I said one final one, if I may, Laurence, then I'll let you get off. Philippines, you talked about political risk, you kind of took that on. Are there any mining companies kind of developing at the moment? Are there any examples of other projects which are making progress or have made progress over the last 12 months?
Metals X, I think it's probably the one I flagged, which successfully converted their MPSA to the FTAA, who are to the northeast of us. That's one that successfully completed the conversion. Honestly, the conversion process for overseas companies has rather stalled, and that was to do with some of the fluctuations and issues of the last 2 years, which has been challenging. There are some other companies having issues at the moment, but it's all to do with open pit. Continuing mining operations and expansions are pretty much getting on with life quietly, paying tax, contributing as it goes. So my belief is with an underground project of this type in a region with lots of underground projects, Stowe Thomas, which I've mentioned, well, that's a very different thing from an open pit mine in a year where landslides have killed people. So the perception sometimes that the Philippines is a bit arbitrary, I think is sometimes wrong, because I think people forget that actually bad mines have killed people this year, and actually I don't think this is always just the Philippines government just deciding one thing and changing its mind. I can actually see the case in point, frankly.
Okay. You're going to join us for a drink?
Yes.
Lovely. Okay, Laurence, thank you very much indeed.